Hey everyone, Larry Walsh here, Channelnomics. I'm sure you're like me, you've been watching what's been happening in the banking sector since the collapse of Silicon Valley Bank last week, the seizure of Signature Bank in New York, and now the Swiss bailout of Credit Suisse, which has been under some stress for some time. Eh, This is a bit different, even though Silicon Valley Bank's failure is the biggest bank failure since the 2008 financial crisis. It's different this time, and it's not as bad, at least that's what the experts say. Now, take that with a grain of salt because I'm telling you this, I'm not a banking expert, I'm just an observer here. What I wanted to share with you is something that I didn't expect to hear, the collateral damage that comes from this. Now, the fear with Silicon Valley Bank collapsing because of all the private equity firms and the tech companies that do their business through that bank, that they feared if the Feds didn't step in the way they did, that they wouldn't be able to do things like make payroll. Now, even though the Feds have stepped in, there's still some lag time between things going back to normal or having some semblance of normal. Now, the Feds have said that the account holders are going to be made whole, but that doesn't mean that things are working. An interesting side effect of all this is not the tech companies that are involved there, and there are a number of them that actually operate through the channel, not being able to make payments. But the interesting collateral damage on this is that there are vendors that do work in that bank that are not going to be able to receive payment. I was talking with a distributor, and he was lamenting that he doesn't know where to send money. That a number of the vendors that he sells on behalf of do business through Silicon Valley Bank, and he doesn't have any place to send money right now. This could be the unintended damage caused by bank failures and bank stress. And there are a number of banks out there that are under stress. I think the Fed said that as many as 30 or so around the U.S. at least are under some type of financial pressure because of interest rates being high and inflation in bad investments, and in the case of Signature, cryptocurrency. Um, we could see as more banks start to show signs of weakness that and may have to go to the regulators to get some level of relief, that it could cause disruption back upstream, that the sales being done by channel partners, facilitated by distributors, the money being generated by that may not get to where it needs to get to. So it's this one I share this with you because I think it's just an interesting little side note to the latest banking crisis. I'm sure there's plenty more to watch here. We're going to be hearing a lot more about banking and its impact on the tech industry, and we'll keep an eye on it for you here as well at Chillnomics. If you like what we're doing, please hit like, subscribe to our channel, and please keep coming back. Until next time, I'm Larry Walsh.